And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA CIB, honoured by the 2025 Salter Awards. Good evening. Welcome to the programme. I'm Stephen Grootes. Does anyone know any politician at all who has not claimed responsibility for cancelling the VAT increase? I mean, it's been astonishing, almost shameful, I think, in a way. I mean, maybe that's too strong a word. Although I think if you sort of say politicians are shameful, I don't think that's controversial at all. It is just amazing how they've all lined up. It was us. No, it was me. No, it was me. I mean, just come on. It was such a big mess. There's really no other way to describe it. The whole thing has just been such a mess. Obviously, everyone, so many people are going to say, well, I told you it would never happen. I did wonder all the way along how this was going to be resolved. And now we know the VAT increase is not going to happen. I do think there are questions to be asked around the management of President Cyril Ramaphosa, who said, I think, almost nothing about the whole thing, really. I mean, very little. I do think there might be questions around Enoch Godongwana as well, the Finance Minister. Did he really think, and how many times have you heard me say this, did he really think the 2 percentage point VAT increase was going to fly? And to do something that's really momentous without consulting anyone outside the National Treasury seems to have been quite risky, and we'll never know, and thanks to Carol Payton's reporting we do now, but we'll never know what would have happened if the President had been in the room at 12 o'clock on the day of the first budget presentation, or what was supposed to be the first budget presentation, and the parties in the National Coalition had started arguing, because we know that he wasn't, because of problems with his plane. I mean, we'll never know. Well, more, of course, on that in the next little while. We'll talk also about tipping and how important tipping is, but how a small change to a payment system can encourage so many people to tip so much more. It's my own personal gripe that so many petrol stations don't let you tip with your card or with your phone. It drives me mad. I don't understand why they don't. Be good to hear from you. Your tipping stories too, please, on 011 883 0702 0214 460567 and voice notes this evening on 072 702 1702.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Well, while the politicians all claim it was them that managed to stop the VAT increase, the real work is probably being done behind the scenes, and hundreds of thousands of businesses around the country who had spent a lot of time, a lot of money preparing to implement the VAT increase ahead of Thursday next week, that now won't be implemented. To add to the problems, the fact that it was a 0.5% basis point obviously makes things even a lot more complicated. We start reaction to it all for you tonight on The Money Show with Busi Mavuso, the CEO at Business Leadership South Africa. Busi, good evening. The politicians have fought and argued and now finally agreed they will not implement this increase. How do you feel about the way the politicians have behaved here?
Yeah, oh my goodness, Stephen, this has been a mess. It has been a mess from day one when the tabling of the first budget didn't take place. The entire thing has really been a spectacle. It has been a mess, and unfortunately that mess has just continued. You know, it is very unfortunate. It is hugely embarrassing, and surely the spectacle could have been avoided. You know, these differences could have been resolved in time, and all of this is seriously negative for the country. It is negative for business sentiment. It is negative for the investor community. And as things stand, businesses had already spent extensive sums of money to ensure that the VAT increase is accommodated. Restaurants have had to get new menus printed. Retailers have had to do price updates, system updates. Other businesses had spent huge sums on letting their customers know about the premium adjustments as a result of the VAT increase. You know, it is small things like these, well, it's not small, but it is precisely things like these that erode confidence in a system and erode confidence in an institution. You know, we have spent so much time, energy, effort, resources, Stephen, for the last 4 years as a country, trying to restore the confidence in a number of ways, from the structural reforms to improving our tax collections to the restoration of SARS and so forth and so forth. Now to undermine and self-sabotage and have this self-inflict, you know, in this way is really unfortunate. Now we have to rush to the courts to try and stop the VAT increase or whatever it is that we actually have to do We now have to propose expenditure adjustments to cover this shortfall in revenue and so forth and so forth. All of this could have been avoided, and it is rather unfortunate. It shows that the government of national unity and democracy therein works, but it really could have been avoided.
I mean, the thing that struck me is we should be having a great national debate every day, constantly around how to grow the economy and how to create jobs for young people. Instead, it's really just been politicians arguing, and they're still at it now.
It is politicking, and I think this entire thing, as we're saying, that it actually could have been avoided, if it wasn't for the arrogance, of politicians, if it wasn't for the failure to adjust the institutional mechanisms, to adjust the institutional processes, to make sure that everyone is consulted, to make sure that the decision that is about to be made, that is going to entire each and every single citizen of South Africa is actually, it finds favor, at least with the majority, of the government of national unity and so forth and so forth. So I really think that this is a spectacle that is really not necessary. And to your point, while in the meantime, we are actually facing serious tests, on the international front, from a geopolitics perspective. We should be trying to find solutions of how we are actually going to deal with the impending trade, tariffs. What are we going to do to ensure, that the impact of the tariffs is actually not going to decimate our economy? The auto industry is going to suffer. The agri industry is going to suffer. What conversations are we having? Are we opening new avenues to try and find new partners? Are we accelerating the African Continental Free Trade Area so that we can actually ensure that we can start benefiting? Those are the conversations that we should be having right now. We are busy scratching each other's faces, and taking each other's eyes out, for no reason at all, so it's hugely frustrating. And again, this could have been avoided. So unnecessary, Stephen.
Busi, the Finance Minister, Enoch Godongwana, in some way, I suspect, has to carry some responsibility for this. He was the one who only told Cabinet 2 hours before that there would be a 2 percentage point increase in VAT. He seemed, I suppose he's representing the National Treasury, but he seemed to refuse to consider other funding options. Do you think he can stay in his position?
That is a very tricky one. I honestly don't know. Look, he has taken accountability. He has actually taken ownership of the problem. He could have dealt with the situation better. Whether or not this warrants him putted out of the position, I honestly don't know. I don't know if is this big enough to actually wipe away, everything good that he has actually done for National Treasury. Because let's agree that he actually has been, consistent, in terms of dealing and doing what is being required, from a National Treasury perspective. He has held the line where he actually needed to. He has pushed back where he actually needed to. This is the guy who actually said we really cannot afford the NHI, against his own government. So he really has done, what a finance minister would have been expected to do, prioritizing the debt reduction, being prudent on our spending, stayed on the fiscal consolidation path, and so forth and so forth. So I really think that we need to take the good with the bad. We can recover from this. It's not unsalvageable, but I think it's a learning, Stephen. And I don't know, do you probably maybe write this off to saying the government of national unity is still young, so we should expect that we're actually going to have such teething problems? It cannot obviously be excused if it happens again, but maybe, this is something that should be a lesson in terms of how to deal with the multi-party government and the consultations that are required and the institutional processes and rigor that needs to be in place to ensure that we can get some of these decisions over the line and not end up with the egg in our face like he's actually sitting with right now.
Busi Mavuso, thank you so much. The CEO at Business Leadership South Africa. Listening to that, Alan Mukoki, the CEO of the South African Chamber of Commerce and Industry. Alan, good evening. I mean, so many companies spend so much time, so much money, putting some of their best people, IT people, accountants, to try and implement this VAT increase that's now not going to happen. They have to undo it all. I can't imagine the frustration.
I think that it would have been a very better approach to have a higher level of communication. But I think all of us as well in business, we need to also understand what the process is. You know, the approval of the framework is not the same thing as the division of revenue bill and the appropriations bill. So to the extent that, yes, other companies went out of their way to start preparing and actually levying the number when they had not seen the president signing the bills, the two bills in particular that should go hand in hand with that particular framework, I think that could have been handled better by both of us, both the private sector as well as the public sector in that particular regard. I think that we all have to learn that in future we should know that a framework is not a bill, that a government cannot levy any charge on you until that is a function of legislation. The government, the president has actually signed the bill, because people don't seem to be aware that a budget is actually a bill. It has to be signed into law. Nobody can come and grab your money without that law having been signed properly by the president. So I think that we're learning it's an evolving situation. It's a developing democracy. We all have to lean on each other in terms of understanding what's going on.
Do you think the finance minister can stay in his position after all of this?
Well, I hear a lot of people saying a lot of things about the finance minister, but constitutionally, the budget has never belonged to the finance minister. The constitution says that the budget belongs to the president. The president signs off on the budget. The minister presents a budget that is not his own. Imagine the situation. Public works reports to the president. Education reports to the president. They don't all get approval for their budgets from the finance minister. The person who approves the entire document, the entire allocation, the entire appropriation, is the one person who signs that document, and that is the President of the Republic. So to that extent, if you then say someone who reports to someone must resign, then you have to ask the question whether the boss must not resign himself. So he has to take that particular decision. I don't think that it's a question about the individual, it's a question about the system itself that needs to work better. Everyone is new. Everyone is learning how to do things. Everyone is trying to figure out how you work in a coalition. Lots of mistakes are being made. Lots of miscommunications are actually taking place. And to that extent, one of the issues that we've actually raised is the extent to which we're able to bring the level of education, to bring the level of executive development and leadership in how people are now supposed to manage in a much more complex environment than they are used to, where it was a homogeneous group of people who come from one political party. Now you're bringing in different people who must actually start to work together. And the group dynamic is very, very, very different to what you're used to doing. And are the skills adequate to be able to enable people to operate in now a very ambidextrous environment compared to what they're used to?
Alan Mukoki, thank you. CEO of the South African Chamber of Commerce and Industry. You're at the Money Show, 20 minutes after 6. Well, there do now also appear to be some questions around the legality of the mechanism that would be used by the finance minister to retract the increase. Charles de Wet is an executive at ENS in the tax practice. Charles, good evening to you. My understanding of the VAT Act, and my understanding of the VAT Act has changed over the last few weeks, but my understanding is that the finance minister can increase VAT by making an announcement in Parliament, which is what Enoch Godongwana did several weeks ago. Is there really a mechanism for just him to retract that?
Good evening, Stephen, and I think that's exactly the problem. So the chaos hasn't really stopped now, in the sense that we now have a media statement, and you can't make law by way of a media statement. And it's quite possible that on the 1st of May, we won't have legislation withdrawing the increase, which will be massively problematic for businesses that want to comply with the tax laws. So you're completely correct. The law says, and this is what the DA's case was about, is when the minister stands up in Parliament and during his budget speech makes an announcement of a date and a rate, then that is applicable and is subject to parliamentary to Parliament approving that within a 12-month period. So he has to undo that before the 1st of May, and the only way he can do that is to pass legislation. Now there is a notice that there will be a new bill that will withdraw it, but as soon as the Speaker gets it, it has to be referred to the standing committee that has to go through its processes before it can send to Parliament to vote on, and then the President has to sign it before it's promulgated. There's no way I can see that happening in a 7-day period.
Would the other option be perhaps to either go to court or for the minister maybe to sort of change sides in the DA's case and to say there was a problem here, or even to bring a fresh application. It wouldn't be the first time, I don't think, in South Africa we've seen someone do something or an entity do something and then go to court to say they shouldn't have done it, and get a judge to say, well, I don't know, the VAT Act is unconstitutional or something. I mean, would there be grounds for that?
That would be a perfect solution and could be done very quickly. If he petitioned the court and said, please grant the interdict that you're already considering, because this gives legal certainty, that would be a very neat solution to a very difficult problem at the moment.
Okay. I don't know what's going to happen politically, and I don't know if the Finance Minister or the National Treasury will actually, and I presume the Speaker of the National Assembly, now that I think about it, would sort of swap sides and go and do that, and what the legal processes would be. But is there a possibility that something else happens, that the politicians now all agree we should retract the VAT increase, and no one goes to court just yet? So we have all the parties saying, okay, no VAT increase, that's fine. But it would still be illegal to not have the VAT increase. So it would still be law that VAT must go up, but no one would implement it. Would that be a major problem? Because that would surely mean that we are not sticking to the letter of law around, of all things, tax.
I think that would be the unfortunate outcome. You know, business wants to be compliant. The commissioner cracks the whip all the time about people being compliant, and you're now in a position where there's not an environment in which they can be compliant. I mean, if they don't increase the rate and SARS doesn't take any action on that, then I mean that could be one outcome. If they do increase the rate when the retrospective legislation is introduced, then they've been acting illegally in the meantime. It's almost a no-win situation. And you would hope that we respect the rule of law in the country, and we have the process in place, and so that taxpayers can follow the law diligently and fulfill their obligations in that regard. So I think it could all just disappear. Maybe there's no risk associated with that, but that would not be a great outcome.
I mean, so what we really need is someone to go to court. That seems to be the only way around this at this stage.
I think that's the right answer, yes.
Charles de Wet, thank you, executive at ENS in the tax practice. What a difficult situation that now needs to happen. Well, let's see which lawyers get the brief to go and ask a court to undo what the politicians have done. 25 minutes after 6.
The Money Show.
The markets.
Graham Kerners at the Kerner Perspective. Graham, good evening. I mean, so much volatility at the moment, but today, generally on the JSE, a relatively good day. And if you consider interest rates may well come down because of yesterday's low inflation figures, we've got the VAT increase not happening. I mean, the only bad news around was load shedding.
Yeah, good evening. As we speak, I'm in the dark, but yeah, I think what you're saying is exactly right. Quite a lot of good news. The bun fight over the budget and the VAT increase seems to be behind us, at least for now. Of course, the question is how the parties now actually re-engage and get a sensible budget and a methodology, I think, for how we craft budgets into the future. But Stephen, if you look at it, our market is pretty much in record territory, in large part driven by gold shares. But, quite a lot of other companies have effectively clawed back the losses that we saw after that brutal sell-off after, the GNU looked as though it had come unstuck and we had that sort of budget fiasco. And then hot on the heels of that, of course, was, the tariff tantrum courtesy of Trump's tariffs. So, our market, a lot of the counters we hold and watch have really clawed their way back over the last couple of weeks. And they in large part back where they were maybe 2-3 weeks ago.
Aspen, quite a strong bounce. They're up, I think, 7% on the day after falling 30% yesterday.
Yeah, look, it's really not a good story. They really caught the market, I think, offsides. I think a lot of people, ourselves included, felt that a lot of hard work had been done in terms of positioning the business, with things like the PE facility, for example. And we were looking forward to a phase where they started to execute on a lot of the promise that they have made and the potential that they have. But clearly, this massive dispute over a very sizable contract and the impairment that will probably go along with that really knocked the stuffing out of it. Lost almost a third yesterday. It was up, I think, about 8% today, but really just undoing some of yesterday's damage. And you got to say, at least until we get results and we get some degree of clarity on the nature of that dispute and how much it's going to wipe out of not only current year earnings, but in the following financial year, you've got to say the market is going to look at Aspen with a very jaundiced eye. And if we have to be honest, they have disappointed the markets a number of times over the last few years. So, chatting to guys in the market, you get the feeling that a lot of people are actually giving up on this one. So I think there's a lot of work to be done. And particularly worrying for me was the fact that, often management there put a fairly positive spin on things. They're optimistic by nature, but you didn't really get that this time around. So I think that's really the reason why that one got absolutely smashed yesterday. But good to see it bounce a little bit. But as I say, I can't see this thing getting back to $160 in a hurry unless there's quite a lot of good news to unravel all the pain we saw.
Mark is also trying to understand the latest out of the Trump White House, and it does seem that he's pushing back. In other words, that he's sort of doing an about turn on some of the most extreme things, so hinting tariffs against China will come down, at the same time suggesting that he won't actually go for Jerome Powell. The problem, of course, is that no one really knows how long this phase will last or until he does it again.
I think, Stephen, you've hit the nail right on the head. So if you look at tech stocks across the pond, strong, probably up on average about 3% in a lot of the new economy stocks. But they could wipe that out tomorrow because he could say something completely new. So I think that's really the phase that the market's in. And I saw, some research results and surveys amongst some of the CEOs in the US, and confidence levels amongst them in terms of the visibility are, even lower than they were with the COVID crisis. We sort of back in many cases to the GFC in terms of lack of visibility. And I think it's the pushback of the likes of, the Walmarts of the world that I think saw him a couple of days ago, and a few of the other corporate CEOs, just saying, just go a little bit steadily, and I think some of his advisors also. So I wouldn't say he's done an about turn, but he's definitely seemingly more willing to smoke the peace pipe than he was maybe a week ago.
Tech stocks are so interesting. Alphabet, the owner of Google, will be reporting, I think, later this evening, our time. That'll set a tone for what's to come. There's a lot of corporate news in the US at the moment.
Yeah, I think generally the results have been good, probably better than expected. But the reality of it is, this is reporting on a quarter that was before, all hell broke loose, really. So I think you can't really read too much into it. And in the case of Alphabet, and quite a few of the tech stocks, they all have quite unique business models. If you take Alphabet versus Meta, versus Apple or Nvidia, they're actually very, very different businesses. So I don't think what happens at Alphabet is necessarily, likely to translate. And you can see it in the earnings growth rates. Amongst quite a few of the so-called Mag 7, you're probably looking at sort of mid-teens, if you're lucky, earnings growth over the next 3 financial years on average. Whereas you've got things like Nvidia that are probably going to up earnings up about 150%. So, but I think to your point, it'll probably help set the mood, and it may actually just settle the butterflies in the market. And then maybe we don't get any more shocks from the White House, and then we can actually start doing what we do again instead of waiting for some sort of news flow from the Rose Garden.
Thanks very much indeed, Graham Kerners at the Kerner Perspective.
The Money Show
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
20 minutes to 7. Good to hear from you this evening on 011 883 0702 and 021 446 0567. I sometimes wonder about the incredible valuations that are given to tech companies, particularly in the US. How can this company be worth so much money, according to shareholders, when in fact it hasn't produced very much? And there's a great example of a business that was, and still kind of is like that, but is now producing incredible value. That kind of helped to explain it all to me. It's also a service that you probably use on a daily basis, maybe even in a small private space from time to time. I'm talking about YouTube. And 20 years ago yesterday, the first video was posted on YouTube. It was a picture of one of the founders. He went to the zoo. He's quite a young man. He'd already made a bit of money through PayPal, and he got someone to film it, and he put it on YouTube, and that was the first video. And it turned out, I mean, according to legend, which has been sort of disabused a little bit, is that there was some sort of dinner, two of three friends were there. The third friend didn't believe everything that had happened. There was no way for them to send the video to each other. This was 20 years ago. And so in the end, someone said, well, let's put it on a website, and thus YouTube was born, sort of. So 20 years ago, 20 years plus 1 day ago, someone filmed themselves and had themselves being filmed going into a zoo and posted the video. That website is now worth around $500 billion. So in 20 years, YouTube's gone from one video of someone at a zoo to $500 billion. And that really explains, to me at least, why some of these tech companies have such extraordinary valuations when they're led by someone like Elon Musk.
702. Stephen is on The Money Show.
6 to 8 p.m.
I'm sure this has happened to you from time to time. You go to a petrol station, you say to the petrol attendant, look, can I give you a tip? And they haul out a machine, you don't have any cash on you. And they say, actually, manager won't let us do this, or you can't do it, or whatever it is. I find it incredibly frustrating. I'm one of those people, like more and more of us, who just never has any cash on them. That's partly because I have children. And that must mean that so many thousands of petrol attendants are done out of a huge amount of money that really is and should be theirs, that people want to give them willingly, but they now never get. So I was interested to read this week that the payment service Yoco, you know, the blue machine, you'll have seen it, they're now offering a service that basically means you're opted in to tip, and if you to not tip, you have to opt out. Katlego Mapai is the CEO at Yoco. Katlego, good evening, and thanks for your time. So you changed the settings. So when you're making a payment, say you go and have your haircuts, easy example, what does the machine then ask you before you actually pay, and how does it work?
Hello, Stephen, and evening to your listeners. Very good to be here. So it's really interesting. We launched a company 10 years ago, and this was actually a feature we had on our machine, our initial machine, where when you went to check out as a customer and the machine was facing you, you had an option to add a tip. So it was a bit more, a little bit more cumbersome back then because we didn't have the full screen like we have now. And you selected a number and you would do this all by yourself and pay, and that was it. And that just became an incredible feature for our customers in the hospitality space. We really simplified the tipping process.
And are you finding that more and more people are giving a tip as a result? Has there been a big impact on the amount of whether someone gives a tip or not?
Absolutely. So it's just so simple, right? It's part of the payment process. You just press a button and you can also choose not to do it. And we've just seen with customers reporting back to us that in some instances they've seen their tips double almost or grow even 3 times just from the feature, and that being available and just changing the user behavior. So it's been very well received by our customers.
Do you see, I don't know if you're able to see how big the tips are. Presume it changes from service to service. A hairdresser might get a certain amount, a waiter might get a certain amount. But I would imagine there's quite a lot of money then moving through the system that is only for tips.
Yeah, sure. So basically, the default values that we have range from 10% to 20%. There's also an option to add in a custom percentage. But on average, folks tend to give the 10%, which is really cool.
It obviously something that's not very difficult to do. And yet, I suppose, so many other services that operate like yours don't seem to do it. I presume it's just software, right?
That's right, Stephen. So I think what we've done is we connect the point of sale system that the merchant uses to our card machine that actually faces the customer. So this is something we really introduced into the small business world. It was typically something you only saw in larger, more established businesses. Using technology and the wireless and all these things, we were able to introduce that in a very simple way to the small business world. And through that, and the fact that the machine faces the customer, and now that we have, these terminals that have these big Android screens, we've been able to facilitate that and make that as easy as possible. And what's nice for our customers is they can toggle this feature on and off on our app. It's a very simple thing to do. And I think that's really what we've cracked, is we've made something that was quite, elaborate and only for larger businesses that could afford it. We've just made it super simple through software, and that's what's driven the adoption. And we see that in the numbers, right? So we communicated that we've actually paid over R1 billion in tips since we enabled this feature, and it's something we're really proud of. I think knowing where this money goes, it's going to, casual workers, folks working in the hospitality space. They're now, getting a nice incentive for all the hard work that they do, which is very proud of where this money is going.
Do you have figures for people who have not enabled it or have disabled it? I mean, do you know how many people sort of don't do tips at all? And I mean, there could be all sorts of reasons why some merchants don't or some services don't.
I don't have exact numbers offhand. I mean, what I do know is what has happened when merchants turn on this feature, or they get they switch from another provider to one of our machines, and they see, 2 to 3x increase in their tips. So that's our only frame of reference.
I know you won't want to speak about your competitors, but if you can do it, I would think they all can. If they run a petrol station, they should be able to do it.
Yeah, and to be honest, we would like them to, right? I think it's an important thing for the staff in these places. So it's something we would love to see. We're just fortunate that because we do pay very close attention to user behavior, and not just, how the merchant is using the machine, but how the consumer is interacting with the machine. This is something we actually introduced 10 years ago. It's just become more prominent because of our newer terminals, and that it's, I guess, a lot more in your face now.
We know that pretty much all of the institutions in society want to move us away from cash. The Reserve Bank does, and correctly in my view. I presume that you still see quite a lot of room for growth, because that process is still going to continue. And wherever you go nowadays, you will see a little blue machine.
Absolutely. Look, what we've seen is in the formal urban areas, the cash to digital migration has gone really well, and to an extent has almost matured. We believe the next frontier now is more in the informal areas and also some of the more rural areas. That's really the last frontier for decashing to happen. And what's nice is there's quite a few players now. There's a lot of options. And that's the nice thing about competition, is that it ultimately benefits the end user. And I really believe that over the next couple of years, we are going to make quite a significant transition towards being fully digital. And I think maybe just to add to that, what we've seen since COVID, which has been a very interesting trend, is business owners going fully digital. So they don't actually accept cash anymore, which has been a really fascinating thing to observe.
Katlego Mopai, thanks very much indeed. The CEO at Yoko. I mean, that obviously is true, and I keep making the point that, there's really no reason not to, to still use cash, and it is just dangerous. It is difficult, though. I mean, so many people, and I can understand this, you want to hold it in your hand. You want to know where it is. You want to touch it and feel it. That I do understand. But I think in the end, it is not going to be like that. I do think, though, and I worry a little bit about this, when you first teach a child what money is, they need to be able to see it. Now you've got to say, look at that number and look at that number, and it's not quite the same. The sense of what money is may be a little bit lost. Your thoughts on tipping, please, on 011 883 0702 and 021 446 0567.
The Money Show, Stephen Grootes, is brought to you by Absa CIB, honored by the 2025 Salter Awards.
There's a statement on Sens this morning from Goldfields about their relationship with the government in Ghana. It's about the Damang mine. And a couple of weeks ago, I think just a week ago, in fact, there was news that they had basically lost their bid to extend their mining license in that area. And today, there was news of a deal with the government. Essentially, what it means is they're allowed to operate it for another year. They'll get all the permits and everything. The Ministry of Minerals, or the equivalent of mineral resources in that country, has agreed to help them get the permits. In return on condition that Goldfields does certain things all around employing people. And what the government of Ghana has done, as many others do, and ours has done through the legislation rather than directly piece by piece or person by person or company by company, is to ensure that people are being employed, people are being looked after, etc. And that's good. I mean, so long as Goldfields are happy and so long as Ghana is happy and so long, crucially, as the people in that community around the mine are happy, excellent. I was reminded, though, of what seems to be some quite strange deals involving the DRC and the Trump administration. I'm sorry to keep harping on about this, but everything is about him at the moment. And it would seem that the DRC has said during tariff negotiations, I don't know if they've said this explicitly, but it seems to be there, that in fact certain minerals will go to the US. And of course, as you know, the DRC has certain minerals, coltan and others, that other countries don't have. And I couldn't help but wonder if the people of the DRC will be looked after in the same way through these deals as the people of Ghana should be looked after the signing of this deal with Goldfields.
702. Stephen is on X.
At Stephen Grootes.
Well, you might have missed it, but this week is Smart Money Week and what is supposed to be Financial Literacy Month. And in the middle of this, the Professional Provident Society has now said it's sharing over 5.3 billion rand in profit share to its members in this country. The PPS normally only accepts members with degrees to join its mutual fund. Well, the group CEO of the Professional Provident Society is Isak Smit. Isak, good evening. Thanks for your time. It's been a very difficult trading environment. I mean, even before all of the trouble around the Trump administration was tricky, how were you able to make these profits in that kind of trading environment?
Yes, good evening, Stephen. Yes, it's a tough trading environment, but look, the investment markets last year were kind generally. Equities, both globally and South Africa, for the second year in a row, in fact, performed well. So that supported our numbers. But also, Stephen, the effects of the COVID pandemic is mostly behind us. So that supported our underwriting profits. And then some of our smaller subsidiaries also is coming through quite nicely. So that also supported the numbers. Yes, we're very pleased about the profit, and I think our members will be pleased as well.
You're giving, so much of this money back to your members. It's the best possible advert for your fund. How do you allocate the money? How do you decide how much you're going to give back and how it's all going to work? And I presume it's also about how much you've individually invested in the fund.
Yes, so basically we return all value to our members. We don't have shareholders, so we don't have that stakeholder. And the only leakage is, of course, the expenses of managing our business, but the rest, all the value we return. And how we do it is we allocate these profits to notional profit share accounts of our members, so it stays on balance sheet. But one day when they leave us, when they exit, for example, when they don't need the cover anymore, we pay that out to them. And as you said, yes, it is in proportion to their cover or their premiums that they pay, and also the investment returns in proportion to the size of their profit shares that has built up over the years.
You're a mutual fund, so you're slightly different to some other funds. Do you believe you'll be able to continue with this kind of profitability? You'll be able to keep making this kind of money?
Yeah, Stephen, of course, it's dependent on investment markets, a big portion of it. So that can, as we all know, if you invest more in growth assets, that can be volatile. But most of our members stay with us for the long term. In fact, our lapse is very, very low. So we can afford to have a longer term approach. And then on the underwriting side, that of course depends on the underwriting profits coming through. But yes, if we don't have periods like COVID with us, and as I said, most of that behind us, on the life side, profits more stable, and also the growth of our smaller subsidiaries that should support it in future as well.
Are there particular benefits of your structure as a mutual fund that you see that maybe other funds lack? Obviously there'll be advantages and disadvantages, but there must be certain advantages to your structure.
Yeah, Stephen, interesting. A couple of centuries ago when insurance started in most parts of the world, most of them were mutuals. It's almost like, I would say, the natural way people coming together and say, hey, we need to protect ourselves. Many demutualizations over the years. These days, not such a common model in Africa which is actually quite strange. It's the continent where of Ubuntu, we understand coming together and so on. But in other parts of the world, still quite common. About a third of insurance premiums still worldwide go to mutuals. Listen, we would argue it's a very good model. I mean, it's mutuals generally have purpose. I mean, they are there for their members. All the value returned to members. So it's a lovely model. I guess when you are in the mutual model, you almost become converted to it.
Mm-hmm. I'm sure. And you are competing. I mean, you have tough competition to get new members, to get new clients or members for you for a mutual. Do you find that quite difficult? I mean, the amount of advertising in this area alone, Isaac, is incredible.
Mm-hmm. Yeah, no, absolutely. It is as you said right at the start, it is a tough environment. We serve the professional market segment, so it's a very bespoke segment. According to our to become eligible for PPS, you need to hold a postgraduate degree or some equivalent qualification. It's a market segment that about 2% of the population maybe qualifies. Yes, and it is the market segment that a lot of financial institutions want to participate in. So at the end of the day, it also depends on the quality of your products, the quality of service, all those things. But then, of course, this mutual model where we also return all the value to our members, that is obviously a big differentiator on our side.
Isaac Smith, thanks very much indeed. Group CEO at of the Professional Provident Society. Just interesting to sort of see how that market is doing at the moment. And, of course, so much going on around it. And, of course, trading conditions for everyone. I shouldn't laugh. Really not the easiest, of course, are they? Plenty to come in the next little while. Artificial intelligence and creativity. We're not talking about the hallucinations of the actual machines. We're talking about the creativity of the people. Where do you draw the line, I wonder? All of that to come. You with The Money Show at 7 o'clock.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa CIB, honoured by the 2025 Salter Awards. Good evening. Welcome to the second hour of the programme. I'm Stephen Grootes. The vexed question of artificial intelligence and creativity in the next few moments. And, AI seems to be getting more and more, do I call it creative? Do I call it something else? More and more hallucinogenic? There we go. That seems to be the case. Of course, that does mean that lots of people who do draw, design, create, think about, do all sorts of things for a living might find themselves in a difficult spot. Or will they? Also talk about funding and small businesses and then investment school this evening. Really looking forward to it. We'll talk about central banks and printing money. And David Shapiro is one of the people who will be with us. David, of course, is, really a veteran in the field. As you know, I don't think you'll mind me calling him that. Also, Vincent Anthonyrajah, a really good, strong, regular person with us today on The Money Show. Looking forward to that conversation. Very, very pertinent at the moment. Good to hear from you as well on 011 8830702 and 021 446 0567. Voice notes as well this evening on 072 702 1702.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app
and DSTV channel 856.
Well, it does seem that if you look at artificial intelligence and what it can create, particularly visually, it is becoming more and more impressive. And in some countries, people who represent creative industries say there needs to be some kind of way to protect them or to manage this. Also, do we need regulators to oversee the use of artificial intelligence in creative work? What happens, for example, if it creates pornography or something like that? How do we do it? And then there's the other big fear, of course, that jobs in design and creating artwork in advertising could simply disappear. Siphumelele Zondi is our tech expert. We speak to him on every Thursday. Siphumelele, good evening. I suppose we should start with the bad news first. I mean, what kind of creative jobs could we actually start to see disappearing? And some of them must be simple design jobs.
Hello, Stephen. And yes, pretty much just about all sorts of creative jobs, right? Because when you think of illustrators, AI is scraping through the internet to figure out what it can copy and what it can recreate. And with a lot of illustrations that artists create, a lot of artists have complained that certain AI tools have reproduced some of what looks pretty close to their work. So that's one. We do know that, for example, this year, a song that used the function of AI, even though it wasn't to create music essentially, but it was to sort of like clean up old audio that was not as clear as it was, did win a Grammy, and that was a song by the Beatles, which won a Grammy this year. We know that, for example, a late South African musician, Ricky Rick, there's a song that used his voice, an AI generation of his voice that came out. Yes, it was with consent of his estate, but that's been done. And also, if you look at the film industry as well, when you see some of those videos that have utilized AI to try and recreate cities, for now, it's still not a 100% correct representation of those areas, but it's something close to it. And you can imagine that as time goes by, it's going to be a cleaner and better version of those places that video would be creating. So it's pretty much just about everywhere, really, in the creative industry.
I mean, will these jobs still exist? Will they be done very differently? Will the role of humans in this change?
It depends on what sort of space it is, right? Because when you think about jobs like, for example, let's say in the film industry, the emotions that AI can't really get, and I'm not sure if it's ever going to get those, like human emotions, for example, and nuances that only humans can get just right. So it might still need a human hand in order for it to understand what took place in a restaurant as a character was sitting by themselves drinking coffee, and there's a lot of things were happening, because those are human characteristics and emotions that AI is probably going to lack for a while to come. But there are jobs, when you think of painters, and even when you think of voice artists, right? How often do you get a call from, instead of you hearing a telemarketer's voice, you would hear an AI voice. And before, it used to be voice actors that used to do that, where companies would get these voice actors in, they would record a bunch of words, and then those bunch of words are what we would hear when we're getting our voice prompts, for example. So think about that going into the advertising industry in future, perhaps.
So, I mean, why are people pushing this so quickly? And I imagine it's the evil bosses, Siphumelele, who know that they can pay a once-off fee for an AI thing and keep using it, whereas the human does not work for free.
Well, that's why unions out in the UK have been complaining, and they've been saying there needs to be some sort of protection, because the old line of bottom line, right? If they can cut costs, they will cut costs. And already right now, some voice artists are being replaced by some AI voices, and you hear some voice artists saying they're being asked to come in, so their voices are going to be recorded by machines and then replicated. Some of them are saying, no, because you're trying to replace me with a machine that's going to replicate my voice and what I sound like. So yes, it's basically because of that. And I suppose, as in the case of some musicians, if there's no way of getting a musician into the studio again, like as was done with the late Ricky Rick, so that's another way of getting Ricky Rick's voice back, or any other musician who can no longer get into the studio. That's another way of getting their voice back into music. So that could be another reason. But it's also cheaper, right? Even for the consumer might find it cheaper. Instead of buying a painting by artist X, I am now buying an AI version of something that looks exactly the same as something that would be created by artist X. But essentially it means that artist X is not making money anymore. It means that they are no longer designing packaging for a particular product anymore, because they've used AI, and also the ethics of it, right? Because a lot of artists have not given consent for their work to be scraped from the internet in order for them to then be replicated by various AI.
I can think of several other problems. I mean, an artist, a human being, knows that certain things are wrong. So one of them might involve images involving children, for example. AI might not know that. If there's no human to check something, you could find all sorts of crazy stuff on your packaging that would lead to all sorts of trouble.
It doesn't. That's why you constantly need a human element there, and AI, if it does get utilized, perhaps needs to be an assistant to a human who understands the ethics of the world that we live in and the various industries as well, and the do's and don'ts, because AI can easily be utilized in to do very damaging things to humans, children, and even industries.
There's another thing to the Siphumelele. I mean, if this happens, and it's happening already, we're going to see such a big explosion in the amount of sort of content that is created. And no human being is going to be able to consume it all, or even consume a small part. There's sort of distraction economy that we already suffer from. You know, you drive down the road, there's so many billboards sort of fighting for your attention. You know, that's just going to get worse and worse and worse. And with that amount of content, no one's going to be able to punch through. Advertising becomes, okay, it's there, but just less effective.
And we are already there, right, where people aren't consuming content for long enough in order for them to engage with particular content, whether it's an advert or whatever else that you are looking at as content as well. And also, sometimes it feels like AI doesn't, at least at the present moment, it does lack a certain human connectivity. For example, let me give a real life example where in the last couple of days I've been looking at student presentations, and a number of them use AI-created videos and AI-created images in their videos as opposed to real spaces and events. But when you look at what's been created by AI, you realize that it doesn't have the depth and the connection that a human would have. And that can also then filter into industries as well. And I remember university being called out as well for having used, instead of using humans, and some people said they could even have used their own students, but they went and used AI in an advertorial video. And they're like, but you're not really connecting with this thing. Imagine if you used your own students as a university, and then as potential students who possibly could have then said, aha, those are the people that go there, and maybe we can be like those humans as opposed to an AI-generated video.
Siphumelele, thanks very much indeed. Lots to think about. Siphumelele Zondi, our tech expert. Lots to think about with AI and creativity.
702 with Stephen Grootes.
Email him on stephen@702.co.za.
Small Business Focus is brought to you by Capitec. No matter the size of your business, Capitec's got you. You know how often small business owners complain about how difficult it is to get access to funding, and the amount of money that they need and the amount of money they get, there's such a big difference between them. Well, there are suggestions now that there are other ways to do it through what I suppose would be called revenue-based financing and invoice-based financing. Eltesh Baijo is the Chief Investment Officer and MD at Flow48, a fintech company that looks at providing revenue in this way. Eltesh, good evening. I really do appreciate your time. So when a company goes and applies for financing, they go to a bank, they go to a funder of some kind. Normally they're assessed on their kind of past performance. You really want to assess them on their current performance. You want to look forward. How do these financing options work?
Thank you, Stephen. Thank you for having me on your show. I think it's a very good question. And yes, you're 100% accurate. Most banks, in terms of how they assess credit risk, is by looking at a business's back data, so their financial statements or management accounts. And for SMEs, it doesn't really give you a very good picture because SMEs have very underdeveloped balance sheets. So what we do at Flow48 is, you mentioned two products. We've got a revenue-based finance product and an invoice-based finance product. We look at data that gives us an indication of what the forward revenue of the business would be like. And that's various sources of data. We utilize alternative sources of data together with the financial help to understand what the business's forward projections are going to be.
Okay, so I mean, you could tell, I suppose, pretty accurately what's going to happen from invoices. I mean, you would like to think everyone's going to pay, maybe not government, Eltesh, or not on time. But you should get a good picture of a company's financials through looking at that rather than just the past performance, is the point.
100%. So, we work with Invoice. So the invoice-based finance product is a very nice product, and it speaks to exactly what you're saying. Most SMEs would provide, for example, services to corporates or multinationals, and the corporates tend to give payment terms that are in excess of 60 days. And what that creates is a cash flow constraint for the SMEs. The SMEs bring the invoices to us. It's a very good indication, especially if it's corporates that are on the other side of the business, of when they're expecting to receive the cash. So we finance up to 80% of the face value of the invoice, and that's a really nice product.
Altesh, I'm just going to ask you to move around to strengthen the reception on your phone, please. I presume in some cases companies will get certain tranches of money at certain times. So the agreement would be in January we're going to give you this, in March we're going to give you that. And because you get real-time data, sort of, you'd kind of know how they're doing. If they don't get the invoices in or the revenue doesn't live up to it, do you cancel that? Is that one of the options here? There's a certain flexibility for the funder, is my point.
Yeah, so on the invoice-based finance, what we tend to do is we tend to match how much we provide to the business, very much aligned to when we expect the payment date on the invoice, as well as the value of the invoice. On the revenue-based finance product, which is more dependent on things like POS data and so on, yes, on those, we need to track very closely what is happening with the business, because seasonality could affect things in the macro environment could affect the revenue as well. So in those situations, what we tend to do is if we see a deterioration in the revenue profile of the business, we would initiate a conversation with the business to understand, what actions we need to take in order to protect our capital.
The only negative I could see, I suppose, and I don't know if it's really a negative, is that you're running a small business and you are giving them giving your invoices to someone like yourself, and then kind of knowing that they'll be taking some of that money, I suppose, to pay it back. Either way, I suppose it doesn't really matter, because companies will have to pay it back in the end. That's the point of the funding, is it does have to be repaid.
It does have to be repaid, yes. And part of the challenge which you're alluding to is not so much about the repayment, but it's about the cost. And what we tend to do is we tend to be very clear about what the cost associated with the capital that we're providing. But I do know, for example, on a lot of products, the cost is not very clear, and some SMEs end up paying north of 40% per annum for the capital that they get, and they borrow from alternative lenders. We tend to think that's a bit onerous on the SMEs, and it creates issues. And we price our loans a lot cheaper than that, and a lot better.
That's ridiculous, 40%. Do you see a lot of interest? When you explain your model to small business owners, are they quite keen quite quickly?
Stephen, we've been growing quite significantly. We started lending in May of last year and started to set up operations in South Africa, and the rate of growth that we've experienced has been phenomenal. And that speaks to exactly the demand in the markets. The overall demand is it's about 550 billion rand, which SMEs are trying to access capital, but they just don't have the access to it. But yeah, so I think there's a big opportunity in South Africa. There's a number of players, but there's a massive demand.
Imagine that demand. It's not quite infinite, but it would feel like it at such high numbers. I presume you would expect then to grow, and you would expect companies to be growing along with you, because they would have the money that they need. Must be quite gratifying to see, if you're seeing their invoices, how their invoices are hopefully growing over time.
Yes, they do grow quite nicely. What we've seen is, and a very good proxy for growth is, number one, the revenue annually on the business, as well as employment. And we see both. Once we've got a lot of repeat borrowers, and we see both the revenue profile of those businesses increasing, and they start to employ more people. So yeah, it's phenomenal.
Altesh Baijo, thanks very much indeed. The Chief Investment Officer and MD for South Africa at Flow 48, a fintech company specializing in providing revenue and invoice-based financing. It does show you how much innovation there is around in terms of financing small business at the moment. And when you consider the problems that small businesses have, and consider how often we hear this lament, this cry, this concern that they're not able to get funding, it does make sense that there will be that amount of innovation. It does seem that things are going. I did wonder, though, about how much demand. I think the demand for any kind of financing must be absolutely huge. And then you do have to make sure you actually get the money back. You don't want to put anything in danger. I think that must be one of the issues that people will be thinking about when they talk about financing small businesses.
702.
702.
Stephen is on X.
At Stephen Grootes.
We were talking yesterday on the Money Show about inflation. The fact inflation for March was at 2.7%. And Stats SA in their release making the point that a large reason for that, one of the biggest factors, was the fact that fuel prices, oil prices have come down so dramatically. And I noticed that OPEC has sort of increased the amount of oil that is actually being produced by some of its oil-producing countries. And oil prices at the moment, Brent crude around sort of $67, hasn't really got to where it was before the Trump administration started the tariff war, particularly involving China. So interesting to see today that the Reserve Bank Governor, Sacci, he's in Washington for the meetings of central bank governors from around the world, making the point that, in fact, lower fuel prices are likely to have quite a big long-term impact on inflation here. And one wonders if just that factor might, in fact, lead to lower inflation and thus lower interest rates in South Africa for quite a long period, or certainly for, let's just say, a few months. Of course, the negative to all of this is that one of the reasons that international oil prices are low is because of fears of a global recession. If you look at what the IMF has said about how it's changed, it's reduced its expectations for global growth. The same is true of the World Trade Organization: less trade, less transport, less economic activity, less economic growth, but also less demand for oil and therefore less inflation here in South Africa. There are a lot of moving parts to all of this. Part of it is around the dollar as well, which has lowered its stew because of Trump's tariffs, but may start to recover. We'll have to see. But certainly fuel prices, oil prices, something very much that we need to watch very closely. Just gone 7:30.
The Money Show.
Investment School.
The Investment School is brought to you by CFI, a leading global trading platform, now available in South Africa. CFI Financial is an authorized financial services provider. Well, so much has been going on around central banks. Central bank governors are in fact meeting in Washington right now as I talk to you. The last few weeks have seen all sorts of comments by the US President Donald Trump about sort of trying to fire the chair of the US Federal Reserve, Jerome Powell, and at the same time more political demands for the US Fed to lower interest rates. And in the middle of all of that, there's been quite a long political discussion over, well, the last few years, but certainly around Trump, around things like the gold standard. I mean, who would have thought people would go back that far? And then you've also got the rise of Bitcoin, which some people suggest would hold a store of value better than many currencies will, because there is a finite amount of Bitcoin that will actually exist in the end. So this evening on Investment School, we're talking about central banks, independence, printing money, and how, if that were to happen, how to protect the value of your investments in that process. I'm very pleased to welcome tonight David Shapiro, the veteran stockbroker and chief global equity strategist at Sasfin, and Vincent Anthonyrajah, the CEO and co-founder at Differential Capital. David is on Zoom this evening. Vincent's actually in the studio. Gentlemen, good evening. Vincent, let me just start with you. Printing money is not getting out a printer and printing money. You mean something else. It's really about making more money available. What does that mean?
Yeah, good evening, Stephen. Thanks again for having me. Good evening to your listeners. Yeah, you're right. So printing money today is not physically printing money, really. The amount of physical coins that are in circulation is not that much relative to the amount of electronic money that's available. And we're talking about all the money that sits in the ledgers in all of your various bank accounts, in the banks, the commercial banks that we all use, but most importantly, the Reserve Bank or the central bank. And it's the increase, or in some cases the decrease of that money supply that people that make real things in this world really worry about. And we'll get onto that in a bit.
David, does it happen often that a central bank for some reason decides they need to print money? What are the sort of circumstances that create that?
Oh, often. In fact, it's a big worry when they do. And I think the biggest worry we had was around about the financial crisis in 2007, 2008, and also the subsequent years, where Bernanke, who studied the great financial crisis or in the 1920s, when he was a master of that, and he followed a policy in 2007, 2008, and there were deep concerns about what he did do. And you're talking to an accountant in my instance. I'm not a monetary theorist. I'm not even an economist, but I remember that time so well, because at that stage, they started to print money, literally create more money, and make sure that the banks were well funded, which was the right way. And he acted ahead of other central bankers in Europe and elsewhere in the world. And it was his action that allowed America to come out of that in a strong position. But there were deep concerns at the time that they were making money far too easily available. And I suppose I can say the same thing for COVID as well, where governments handed out money to people to go out and spend, not considering the consequences. So yes, there have been many times where in history this has happened. So I'm not sure I can recall all the different incidences, but it's I don't want to say it's quite common.
Let's talk a little bit about the consequences then, Vincent. So if you have a certain amount of goods and services being produced in an economy, and you now increase the amount of money, you have one of the classic definitions of inflation, which is too much money chasing too few goods. And is that the problem, that you automatically create inflation when you print money?
Sure, that's definitely the problem. Just a little story before I explain. It's kind of interesting. About maybe 30 years ago, I remember when Tito Mboweni was about to become governor of the Reserve Bank. I actually remember David Shapiro on one of these shows talking about how concerned people were about the printing of money that could happen. Because you're right, Stephen, what happens sometimes is there's let's call it the excusable reason why governments might want to increase the amount of money supply so that people can afford things when the economy has a bit of a heart attack and it allows the economy to recover. But then there's the not so good reason why a government might want to start printing money. It's when they start abusing their own finances. So irresponsibly just generating a large amount of currency. And then to answer your question specifically, what then happens is if an economy just consists of, 10 apples and the price of each apple is 1 rand each, and if we suddenly double the amount of rands that's available, eventually the price of those 10 apples will become 2 rand an apple. And that's the problem, is if you start irresponsibly pumping the amount of money or increasing that money supply, the costs of real goods and services actually increase. And the problem is people that don't have pricing power often get hurt the most. So what happens is people that are closest to that printing of the money, it's called the Cantillon effect, that's a fancy word for it, is people that are either working at banks or in financial institutions are able to receive that money faster than the rest of us, are the ones that actually drive the prices up, get their salary increases, and they're fine. But then it's the people that are furthest away from that suddenly find the costs of goods that they have rising faster than their own incomes do. And that's the real danger that happens when you print money.
David, to hear...
Stephen,
go on.
Sorry. You know what I think is important and is to understand where printing money came from. You mentioned the gold standard, and I think for people who are listening to the show, I think one has to go back to what Vincent said with the apples is very important. And it's a very important example. And you have to go back to where we came from, explaining the gold standard and how this kind of transformed into the monetary economics that we have today, or the monetary systems that we have today. So it's what was the gold standard? And exactly as Vincent pointed out, what happened is that your currency had to be backed by gold. If it wasn't backed by gold, you couldn't increase the supply. So for every dollar you had, you could exchange it for gold. So countries had to have enough gold, to support the convertibility if it happened. And of course, there just wasn't enough gold to support increasing international trade. So it's developing from that we got the money system. I don't want to take over the show. I'm just saying that's how we've got to where we have got today, where they met in Bretton Woods, I think, in 1944. That's where they created the International Monetary Fund and so on. And it's from there that we got fixed, we got fixed exchange rates, and there were various other issues that happened there, and which got us through, I think, right through to 1970. I think when Nixon took away the gold standard or the convertibility of dollars into gold. But it's all progressed from there.
Okay.
Vincent seems to know what's happening. He's the man who can explain it in better terms.
Vincent, from what you describe around the price of apples going up, this is what happened in Zimbabwe, isn't it?
Yeah. So that's an example of, let's call it, the more irresponsible approach to increasing the money supply. And that's if you take what happened in Zimbabwe, productivity was actually, in that case, actually declining. So let's call it, the main source of Zimbabwean economic activity, the agriculture, a lot of their mining, that was stopped. Now, in that case, you have the goods and services actually declining. So the number of apples in the bucket reducing. And again, the people closest to the money supply printing very quickly so that they can go and spend it and, be fine and convert it to dollars or whatever it is. And then who ends up suffering? It's the people on the ground who 2 weeks later realize that there's 10,000 times the amount of Zimbabwean dollars in circulation, and your price of bread has gone up. Partly because of the dollars, but also because there's less bread to go around. So that is probably an example of the worst situation that can arise when you're irresponsible about how you handle the amount of currency in your system.
David, the decision to print money, who would normally take that? Is it just the central bank? It's quite a big decision to give to a small group of people. I recall during the pandemic, I think someone asked the Finance Minister, Tito Mboweni, how often are you speaking to the Reserve Bank Governor? He said 4 times a day, which was probably correct. I presume it would be a joint decision.
Well, not really. It shouldn't be a joint decision. It should be, as we're seeing the frustration now with Trump and Powell, although this is off a different level. But I think this is where the independence of the central bank is. It's their decision. And you can see that during the COVID, it was the central bank's decision to buy back. They went into quantitative easing, which was creating more money. I'm sure this was done in discussion with the Treasury because it's very important. But the central bank was the vehicle for buying back bonds off the market to create liquidity into the market. If you don't understand, what they did is that, of course, there were institutions that held bonds, and by buying it back, giving them real cash, you put money into the system. That was the whole basis of quantitative easing. But that was governed and controlled by the central bank. And it was the central bank who decreased interest rates to levels, which was zero during the whole COVID era. We only started to reverse that a few years ago. So if you listen to speeches by Jay Powell or by Sacci, by the governor, and that, you can pick up very much, around their policies towards that. So this is, I think it's primarily the central bank. That's why their independence is so important.
Okay. David, I would like to ask you, there are some people who suggest that cryptocurrencies are the things that because you can't just create more of them, so Bitcoin will have a certain amount of Bitcoin and that's it, finish and clear, full stop. And as a result of that, they're a better store of value than any other currency. They're a better store of value than the rand, because one day you could create more rands or you could create more dollars. Do you buy that?
No, I'm not a crypto person. Look, it's gaining popularity, and I'm probably the wrong person to talk to about it. But eventually, it's convertible. It's for me, it's more like a gold story. I'm not a gold bull at all. Far from it, in the same sense that I think we're only seeing gold go up here. It's almost like, bomb shelter. It's just a place where, okay, I'm going to go to avoid all the fallout that we're seeing. But at the end of the day, it doesn't really create growth. Yes, it's a store of value, but how much value do you put in? So I'm pretty much a person who believes in central bank's role in monitoring and supporting an economy together with Treasury, which is fiscal policy. So I think the combination, I'm far more in favor of that combination of creating growth in the economy than actually storing growth. And that's where the responsibility of central banks is so important. And credit to our government and our governor. Credit to him and the way that he has handled things, because I promise you it could have gone pear-shaped many, many times. So does crypto support this? There are just too many unknowns about it, that concern me. We need a proper controlled market for this to happen, one that you've got confidence, that you can buy and sell and there's much better control, which maybe we'll go there. But really, Stephen, I'm going to get attacked by all the youngsters, by all of those people who believe in crypto. But I still think there's a long way to go before you actually reach that kind of level.
In a moment. So if banks are printing money, if they're in that situation, how do you protect your investments? That's next on Investment School.
The Money Show, Stephen Grootes, is brought to you by Absa CIB, honored by the 2025 Salter Awards.
The Money Show.
Investment School.
Investment School tonight. How to survive if central banks start to print money. David Shapiro is a veteran stockbroker and chief global equity strategist at Sasfin. Vincent, Anthonyrajah, CEO and co-founder at Differential Capital. All right, so we've spoken a little bit about what printing money is, the circumstances under which it will happen. Let's talk about how you make sure your investments survive. Vincent, so a bank starts to print money for whatever reason, because Trump tells it to, and it's now an emerging market, whatever it is. How do you actually manage your investments in a time like that when the value of money is decreasing?
So the first thing you need to look at is what stuff or services has the most pricing power, because that's the critical question you need to ask yourself. And some people might say it's actually gold and commodities, and they might be right. I think as David said, in this case, you can see how in response to the threat of money being printed, people say, okay, another store of value is gold. It's got ultimate pricing power. Or you could look at the other end of the spectrum, companies like Microsoft. I had a colleague of mine send me a frightening email from Microsoft where they've increased the cost of his subscription services by 35%, So again, goods and services that have pricing power. And I'm not the biggest fan of Warren Buffett, but in this case, these sort of environments, the moats, the ability to reprice, because what's going to be happening is any company, their own costs are going to be increasing. But if you're, again, closer to the money printing system, or you've got pricing power, you can increase your costs, your revenue, and the goods and services that you provide at a faster rate than the cost that you used to make it. And it's important to find companies like that. So for me, that's kind of the two-pronged strategy. Look for commodities and people that make commodities, as well as then look for companies with really strong pricing power. The worst kind of companies are companies that actually make highly commoditized things, or you might even find that very strong companies like food retailers. Unfortunately, some of them might not be able to pass on those increases, and because the consumers can't absorb them, they end up taking some of the hit. So those are the companies you generally want to try and avoid. And then you go for those high margin guys with very strong pricing power. So again, Microsoft is probably the easiest example that I can think of at this point in time.
I was going to ask you about food retailers and supermarkets, actually, but I understand your point. David, would you go along with that? You've got to look for companies that can actually extract price, that can control pricing.
Absolutely. Funny enough, I think this weekend is Mr. Buffett's AGM, or next weekend. I'm not quite sure. But I attended many of those, and he would always say, during periods of high inflation, invest in yourself and invest in your own ability, to create more wealth, to earn higher income. In a way, it's what Vincent is saying. I agree with companies with moats. Moats means that they have the protection, that they have pricing power. And, for that reason, in these kind of times where you are concerned, I still like to go for good businesses. And I still believe that, technology businesses like Microsoft, which we need, which we're using all the time. Now, I think, in fact, I'm not quite sure which program we're on now, whether it's Teams or Zoom, but, we need them all the time. We can't do without our Apple phones or phones. We can't do without data. We can't do without any of those. We might limit it in that, but I think those are the businesses that I believe in, that can create things and create the services that we absolutely need. So I'm not a gold man, So,
I was going to say.
Yes, gold's going up and gold miners are making a lot of money. It never lasts, because as soon as things start reversing and confidence comes, these things fall. And suddenly you're stuck and you're not quite sure when to get out. So I prefer to go for, for quality businesses, which, as Vincent said, have got that pricing power and which are still going to be selling their services despite concerns about inflation.
I would imagine, Vincent, there'll be quite a lot of competition for those stocks. I mean, the price will go up. And it's interesting to watch the Magnificent Seven recently of how deep the troughs have been and how high the highs have been, partly because of Trump. But that's not necessarily related to the printing of money. But the printing of money does happen in difficult and volatile circumstances.
Yeah, look, it's an important one to talk about, Stephen. I thought it's probably really important for everybody to realize the problem that's happening in the US. So ignore the political noise. The hardcore fact is that $9 trillion of debt is coming up for refinancing now. And one of the ways you refinance it is you print money. So the interesting thing is all of the noise that we've seen in the stock market until right now, how much have good quality companies' ability been properly priced in? I'm not sure. I actually find that markets are sometimes slow to react to how powerful some of these companies can reprice. And I think that's where your opportunity is. It's sometimes so obvious, like you'd think Microsoft would have instantly gone, right, we're into money printing mode. This is one that's just, whatever services they have, they almost have monopolies in our lives. And I actually find that the market takes a while to, number one, realize that, we're actually into potentially a money printing moment. And those companies probably end up surprising the market, and that's where you get those excess returns, because all of a sudden Microsoft prints a 15 to 20% better profit growth than the market even anticipated. That's what tends to happen. These companies surprise people. And that's what you've got to back. Those quality companies that have that pricing power, they tend to surprise as we head into this inflationary environment.
We're about to run out of time, but David, we've got 30 seconds left. And the last time I think I spoke to you on the Money Show, you were quite optimistic, and this was before Trump came in and did what Trump has done. You were talking about AI, inflation was coming down, and I was very heartened by your optimism. I know you as an optimist, though. Are there still reasons for optimism despite everything that's happened since then?
Yeah, because he's backtracking. I think we're up for the third day in a row quite significantly. And I think that it suddenly struck him what he's doing and how he's destroying the US economy and the rest of the world. And I know we haven't got real time to go into it, but I think he's starting to backpedal. And that's a good sign that he's going to ease back quite a lot on tariffs and a lot of the other issues that he's addressed. So I think we're starting to fall on the bottom. Just too early to get in, but I think we're going to see much better times from now on.
David Shapiro, always good to hear from. I'm going to have to end it there. Thank you very much indeed. Veteran stockbroker, Chief Global Equity Strategist at Sasfin, and Vincent Anthonyrajah, the CEO at Differential Capital.
The Money Show with Stephen Grootes is brought to you by Absa CIB, honored by the 2025 Salter Awards.
We're back tomorrow. It's just gone 8 o'clock.